Xpeng, ticket symbol XPEV, has become the second favorite Chinese company aside from NIO. Both companies have seen historic time highs, with Xpeng reaching over 65% and NIO nearly 100% simultaneously. In this video, I will address my review on Xpeng, my thoughts on the company, and its advantages over NIO and other EV automakers. If you want to learn more about NIO specifically, I made a video all about NIO here. Welcome to Electric Invest, where we discuss EV companies and interchange knowledge for a better investment. Recently, Citigroup has put Xpeng as a buy and has a target price of $34.70. According to Barron's, 85% of the analysts covering the stock rated as a buy, which is above the 58 average rating ratio for stocks in the Dow Jones Industrial Average. The analyst average target is roughly $26. JP Morgan also came out with a $27 price target, stating competitive price, and they can capture a sizable and fast-growing addressable market. So we have prices of 34, 26, and 27, with a current price of around $32 or $33 at the time of recording this video. And the question is, should you jump on board and buy Xpeng? Let's look a little bit further. Both Xpeng and NIO are based in China, which currently has the largest EV market in the world and will continue to do so as the Chinese government is aiming for 25% of all vehicle sales to be electric. This is estimated to be over 6,375,000 EVs by 2025. And the major beneficiaries will be NIO, Tesla, as well as Xpeng. It was just 3 months ago when NIO was trading at right around $12 a share, and a lot of people were saying it was overvalued and it would crash back down to $1. We all saw how it turned out in a very short amount of time. Keep in mind that NIO, Tesla, and Xpeng all are part of a fast and growing new emerging market, and the trend will continue to grow exponentially. Xpeng is a company that will reward those who buy and hold over the long term along NIO and Tesla. Xpeng had an impressive delivery of over 3,000 of its smart EVs. Now, these numbers may seem small in comparison to NIO's 5,000 monthly sales, and a far cry when compared to Tesla, but keep in mind that this is an increase of 229%. And the reason for the increase is due to the P7 model, which is what really impressed Wall Street the most. When it comes to manufacturing, Xpeng has the advantage of being fully vertically integrated. Just like Tesla, Xpeng has its own modern factory with plans of building a second factory to be completed by December of 2022. Keep in mind that NIO still doesn't have its own factory and still outsources many of its important manufacturing processes. Aside from a lack of factory, NIO also outsources its driver-assisted software. However, Xpeng actually makes its own in-house. They call it the X-Pilot. This is one of the major differences between Xpeng and NIO at the current moment, despite being roughly the same age as NIO. This could potentially mean much higher margins for Xpeng over the long run compared to NIO, at least until NIO decides to make their own factories and their own software in-house. Another advantage that Xpeng has as a result of owning its own factory is that they can ramp up production much easier and faster compared to NIO. They can access better tax benefits as well as a much better manageable overhead cost. NIO's margins could have been much higher today if they have taken the same path as Xpeng and Tesla, but maybe their similarities with traditional automakers may be the reason why NIO is still more recommended on Wall Street today. In other words, if you are too different or tackle too many difficult problems at the same time, you will have a higher chance of being misunderstood. Don't get me wrong, I personally own both NIO, Xpeng, and Tesla stock, which comprises over 90% of my entire portfolio at a very equal amount, because I believe they all provide special value to this emerging electrical market. The only concern I have for Xpeng at this moment is that they will lease their second factory for 7 years, and if they don't manage the capacity, this could lead to unnecessary expenses. With all that being said, let's talk about the 5 strengths that will make them stand out in a very competitive EV market. Number 1, their partnership with NVIDIA, which is one of the largest and most well-respected chip makers in the world. NVIDIA's in-house vehicle computer, used in the P7 sedans, claims to be able to perform 30 million operations per second, but yet only consume 30 watts of power. It is also able to update software wirelessly. This is up to par with Tesla's over-the-air updates and fast computing power, giving Xpeng a very strong competitive angle to Tesla and NIO. Nvidia should also be able to assist in scaling their technology to reach full autonomous driving level 5. After all, Xpeng has the largest spending on their research and development department, with the largest investment in software and autonomous driving of any company in China. They spent $293 million just in 2019 alone. This is one of the reasons why they are dubbed the Tesla of China, and openly admit that they used Tesla's patents when Elon made them open sourced in 2014. Xpeng really has tremendous ambitions on becoming one of the best autonomous self-driving vehicle companies on the planet. Number 2. The P7 is a lower-priced alternative to Tesla Model S in China, costing less than half the price. This puts the P7 at the price to compete with the Tesla's Model 3, which surprisingly offers a slightly larger driving range of 706 kilometers or 438 miles, compared to the current 568 kilometers or 353 miles on the Model 3 long range. Number 3. Xpeng is aiming at a slightly lower demographic compared to NIO, which will help in capturing the massive middle-class demographic in China. Number 4. Xpeng has a strong relationship with Alibaba, which will provide them with financial support, credibility, as well as brand recognition. Xpeng is also planning on overseas expansion, and Norway's advanced EV infrastructure and consumer awareness makes it an ideal first market outside of China. There are speculations of a name change, but due to the Xpeng name not being very appealing to the broader market, there are speculations that Xpeng could make a branch with a different name that would be more appealing to the Western markets, which should help Xpeng in receiving more worldwide recognition. There's a lot more information I did not cover in this video, but I do want to say that in conclusion, Xpeng has a tremendous potential that I don't recommend anyone sleeps on. NIO is not the only company that the Chinese government is sponsoring. Xpeng also has a lot of partners with many other companies aside Alibaba, and due to their extensive vertical integration, should be able to have a tremendous competitive advantage over NIO, specifically due to NIO losing some of its margins, outsourcing its factory and driver assistance software, amongst other major things that NIO doesn't currently do in-house. Just like any other startup, NIO is a long-term investment, and traders should be mindful of tremendous volatility in a market that is still paving the way for the future. Like I mentioned before, I own equal amounts of Xpeng as well as NIO and Tesla, because just like JP Morgan addressed, I also believe that they all have tremendous potential for reaching a sizable part of the gigantic electric vehicle market that's about to unveil in the upcoming years. So I would like to know your opinions regarding Xpeng and the P7 and its advantages over NIO, as well as its similarities with Tesla. Now that you have a little more information, would you consider investing in Xpeng? There's a lot more information that I didn't cover in this video, so if you would like to learn more about Xpeng, don't forget to subscribe and hit the bell so you never miss the new videos coming up. Give a like for the YouTube algorithm. I'll be responding to every single one of your comments. Thank you so much for watching. Keep investing in electric, and I'll see you guys in the next video.